Dobar dan svima. Dame I gospodo.
Good afternoon, ladies and gentlemen, dear media representatives, esteemed colleagues. Welcome to the presentation of the February inflation report. We will present to you the current macroeconomic developments, our new projections, and monetary policy decisions. At the very start, I wish to give a brief overview of last year. That is, I will present the domestic macroeconomic developments that we believe marked 2017 and that are important from the aspect of the corporate sector, citizens, the government, all of us. I would like to open this conference by reminding us of an important decision from late 2016. Namely, we lowered the inflation target by 1 percentage point, starting from January 2017 to 3 plus minus 1.5%. That we were realistic in setting the target and consistent in its implementation is confirmed by the fact that inflation moved within the bounds of the lower target corridor throughout the year and stood at the 3% target both on average and in December. In 2017, 3 rating agencies upgraded Serbia's credit rating, and the country risk premium fell below 100 basis points to its lowest level. Concretely, for all of us, this means the possibility of using both domestic and external sources of funding under more favorable conditions. The government budget recorded a surplus of 1.2% of GDP for the first time since 2005. The share of public debt in GDP fell by 10.4 percentage points, thus speedily getting closer to the 60% boundary. The 8th review of the arrangement with the International Monetary Fund was successfully concluded with the assessment that progress achieved in numerous fields outperformed the defined criteria. Interest rates on dinar corporate and household borrowing declined further in 2017, as did the rates on government borrowing. Lower interest expenses certainly contributed, among other factors, to an improved fiscal performance, which continues into this year as well. I wish to remind you that at the auction of 10-year dinar securities of the Republic of Serbia, held on the 6th of February, demand outstripped supply almost 5.5 times. Securities were sold at a 5.35% rate, down by 7.64 percentage points relative to the same maturity auction of October 2014. These data speak volumes about investors' perception of our economy's prospects. What makes us particularly happy is that the government borrows in dinars over a 10-year period at rates that are much lower today. This is another concrete example of savings made based on everything done in the past period, with full coordination of monetary and fiscal policy measures. Last but not least, we have lowered the share of non-performing loans, which was particularly high, below the pre-crisis levels. Their stock has been more than halved in the previous 2 years. A good year is behind us, and we expect positive trends to continue into this year as well. This is also confirmed by our new projections, under which inflation will move within the bounds of the new lower target band in the next 2 years as well. In regard to the economic growth projection, we believe that economic policy measures are well calibrated and have created a basis for sustainable acceleration of GDP growth of around 3.5% in 2018 and 2019. Now, I will say something about the international environment, outlook and risks. Last year saw volatile trends in the international market, which will continue by all odds into this year as well. Given the openness of our economy, we carefully monitored and analyzed movements in the international environment. The period from the previous report was marked by a brighter global growth outlook. Particularly important for us is the improvement of the growth outlook of the euro area and countries in the region, which are our important foreign trade partners. On this basis as well, we expect positive effects on further growth in our exports, which was robust last year as well, recording a two-digit rate and maintaining a broad dispersion by product and geographical area. While global growth prospects are favorable, trends in some markets are still marked with uncertainty. In commodity markets, oil prices increased further compared to the previous inflation report, reflecting both supply-side factors and expectations that demand will rise more rapidly with global growth acceleration. In January, the Brent oil price exceeded $70 per barrel, which is its highest level since December 2014. Owing to higher energy prices, global inflation is somewhat higher than in the earlier period, but still no stronger inflationary pressures are expected in the majority of countries. In addition, based on oil futures that we use in our projection, we do not expect further growth in global oil prices. Of course, this is also confirmed by today's data because oil prices are falling. Of course, deviations are possible both for oil prices and prices of other primary commodities. Also, the leading central banks continue to pursue diverging monetary policies due to different economic cycle phases of their economies, while financial conditions remain favorable. Thus, the international environment is still marked with uncertainty as to the speed of Fed's monetary policy normalization. Another question concerns the duration of monetary accommodation of the European Central Bank due to faster than expected growth in the euro area. It is indisputable that external challenges have existed and will exist. However, what is important in the context of analyzing overall developments is the fact that our economy's resilience to shocks increased in the past period, including the readiness to respond to these shocks in a timely and adequate manner. A contribution certainly came also from fiscal performance, which was more favorable than initially expected. The surplus of 1.2% of GDP at a consolidated level was achieved in 2017 for the first time since 2005. Positive fiscal trends continued largely on account of rising domestic demand and corporate profitability, labor market recovery, and enhanced efficiency of tax collection. Indubitably, a better fiscal result was achieved also on account of lower interest expenses, both owing to the government's diminished needs to borrow and monetary policy easing by the National Bank of Serbia. Lesser government needs for funding were one of the factors leading to the sharp decline in the share of public debt in GDP of 10.4 percentage points in 2017. At the end of the year also saw the repayment of the due euro bond issued in the international market in 2012 in the amount of $750 million, which reduced the level of debt and its dollar component. In the course of 2017, the country risk premium measured by MB declined considerably, given that MB Global fell by 54 basis points last year and that MB for Serbia fell by 147 basis points. It is clear that a portion of the decline in our risk premium was due to global factors, though to a larger degree it was determined by domestic factors as well. The preservation of macroeconomic stability, strengthening of domestic fundamentals, and Serbia's more favorable growth outlook resulted in Serbia's risk premium falling below 100 basis points for the first time on record. Late last year, two rating agencies, Standard & Poor's and Fitch, upgraded Serbia's credit rating with a stable outlook. The 8th review of the arrangement with the International Monetary Fund was also successfully concluded. In January, Serbia's risk premium fell to its lowest level on record, 85 basis points. A fall in the risk premium and upgraded credit rating of the country contribute to rising foreign investor confidence as to long-term investment in Serbia. The opposite is also true. In 2017, this also resulted in a considerably higher net external capital inflow, notably foreign direct investment, which exceeded the previous projection and reached 2.4 billion euros, that is 6.6% of GDP. Thus, for the third year in a row, it ensured full coverage of the current account deficit. In gross terms, the foreign direct investment inflow to Serbia came at 2.55 billion euros. On these grounds as well, in 2017, appreciation pressures prevailed in the foreign exchange market, and the dinar gained 4.2% against the euro. To ease excessive short-term strengthening of the dinar, in 2017 we intervened in the interbank foreign exchange market by purchasing foreign currency worth 725 million euros net, which further bolstered the country's foreign exchange reserves. And this also created a buffer for interventions in case of need in this year.
In an environment of low inflationary pressures, past monetary policy easing by the National Bank of Serbia led to a further decline in the cost of dinar borrowing, while interest rates on all types of dinar corporate loans fell to new lows in December. This, together with a falling country risk premium, enhanced interbank competition, economic growth and labour market recovery, as well as low interest rates in the euro area, contributed to acceleration of lending activity. A rise in total loans, excluding the exchange rate effect, equaled 7.4% in 2017, with corporate lending rising by 4.3% year-on-year. Excluding the effect of the write-off of non-performing loans in the past year, the recovery of lending activity is even more evident. It rose by 10.2% year-on-year, with corporate loans going up by 7.4%. In addition, the resolution of the issue of non-performing loans was stepped up. Their share in total loans fell below the pre-crisis level, and their stock in the past 2 years more than halved, a drop of 53%. This provides additional support to lending activity and economic growth going forward. Consistent with our estimates, GDP growth has gained ground with the gradual waning of supply-side shocks. In the fourth quarter, it accelerated to 2.5% year-on-year, underpinned by faster growth in construction and majority of service sectors. Manufacturing continued to provide a positive contribution, while agriculture, due to bad agricultural season, recorded an expected slump. On the expenditure side, growth accelerated the most on the back of private investment, supported, among other things, by the high inflow of foreign direct investment. Our new projection also confirms that in 2018 and 2019, GDP growth will accelerate to around 3.5%. Investment is expected to remain one of the drivers of economic growth, bearing in mind further improvement in the business ambience, a high foreign direct investment inflow, infrastructure projects, and past monetary policy easing. An increasing positive contribution should also come from household consumption amid a further recovery in the labour market. We also expect further growth in exports, particularly in manufacturing, whose exports continued up in 2017, reaching 13.6%, thanks to investment in the past period and expansion of external demand. Imports are also likely to increase, particularly imports of equipment, with the continuation of the investment cycle. Ladies and gentlemen, dear colleagues, allow me to conclude the first part of the conference by presenting the data on inflation movements. Owing to well-calibrated monetary policy measures and full coordination with the fiscal policy, in the course of 2017, inflation moved within the target of 3 plus minus 1.5%. And in December, as well as at the level of the annual average, it measured the target at 3%. That inflation pressures remained low is indicated also by core inflation, which in December hit the lowest level since the introduction of consumer price measurement, 1.3% year-on-year, as well as by inflation expectations of the financial sector and corporates, which have been anchored within the target. As of the beginning of this year, inflation is expected to slow down and move closer to the lower bound of the target tolerance band. In an environment of low inflationary pressures, this will also be supported by the dropout of last year's one-off price hikes of certain products and services from the year-on-year calculation. In the medium term, according to our new central projection, year-on-year inflation will continue to move within the target tolerance band of 3 plus minus 1.5% until the end of the projection horizon, that is in the following 2 years, which will also be supported by the gradual recovery of domestic demand. Taking into account primarily the expected movement of inflation and its key factors in the period ahead, as well as the effects of past monetary policy easing in the period since the last inflation report, we kept the key policy rate at 3.5%. In the coming period as well, monetary policy decisions will depend on our estimate of the impact of domestic factors and factors from the international environment on inflation movements in Serbia. In our judgment, the major risks come from the international environment, and thus we will continue to closely monitor and analyze movements in the international financial market and the market of primary commodities, and to assess their impact on economic movements in Serbia. Of course, same as before, the National Bank of Serbia will use all available instruments in order to keep inflation in Serbia low and stable in the medium term. I believe that this, together with preserving financial stability, is the best way for a central bank to contribute to sustainable economic growth and to strengthen resilience to challenges from the environment. I will finish my introductory address with these words and give the floor to my colleagues from the Directorate for Economic Research and Statistics, who will briefly present the latest projections and text boxes from the report. Mira will present 2 interesting text boxes presented in the report. What you will also hear from them is that our projections of inflation movements indicate that in the coming period we will continue to fulfill our primary legal mandate of keeping inflation within the target. While well-calibrated measures of economic policy set the groundwork for a sustainable acceleration of GDP growth, which we estimate at around 3.5% in 2018 and 2019, and at around 4% in the medium term. Before I give the floor to Mira, I would like to ask Dragica and Slađa to distribute our presentation to journalists so that they can follow the items and have all the data presented before them.
As Madam Governor has said, in several minutes we will present you the inflation projection in more detail, the projection of economic activity, and 2 text boxes given in the current issue of the inflation report. I will start from the inflation projection, as you can see in the slide shown. According to our new February central inflation projection, inflation will continue to move within the target tolerance band in the next 2 years. And we expect that in 2018 it will move closer to the lower bound of the target tolerance band, and that it will decline sharply in the first months of this year. This will be supported by the effect of the so-called high base, that is the dropout from year-to-year calculation of one-off price hikes of some products and services, which took place early last year. For the sake of reminder, those were several products and services whose prices went up, these being primarily the prices of solid fuel in an environment of exceptionally cold weather early last year, then the prices of petroleum products due to rising global oil prices, as well as the services of mobile telephony. The effects at the start of cold weather and then the drought in 2017 reflected on the relatively high rise in prices of fruit and vegetables during 2017, meaning that on these grounds as well we will have the base effect. Starting from the mid-year, we expect a gradual rise in inflation on account of the recovery of domestic demand. What we wish to reiterate, and what you can also see in the fan chart, is that we expect that inflation will move within the target tolerance band in the next 2 years. If we compare the February inflation projection with the previous November projection, we can see that our new projection is lower until the end of the projection horizon compared to November. This is due primarily to the lower growth in prices in the fourth quarter of 2017. That is a lower growth than expected in November, and we also have a lower projected rise in primary products expressed in dinars than we assumed in November. As for the risks to the projection, they are symmetric. And we believe that the key risks emanate from the international environment and relate primarily to movements in the international financial and commodity markets, and to a lesser extent they also relate to administered price growth this and next year, which we assume to be around 4%. All in all, we believe that the risks to the projection are symmetric. When it comes to the projection of economic activity, as the governor said, we expect that this year real GDP growth will equal 3.5%, and a similar pace is expected next year as well. When it comes on the production side, it will be led by the continued positive tendencies in the industry and service sectors. A positive contribution is also expected from construction that recovered already in the second half of last year. And assuming an average agricultural season, a positive contribution is expected from agriculture as well. For the sake of reminder, last year saw a relatively bad agricultural season, which led to a reduction in agricultural activity. And this year, assuming that the season will be average, we also expect that the contribution will be positive. On the expenditure side, the growth will be supported by investment, and investment will be one of the contributors to economic growth. Another contribution will also come from consumption, personal consumption. A contribution of net exports will be slightly positive because positive tendencies will continue when it comes to exports, underpinned by earlier investment and rising external demand. on account of economic recovery of the euro area and our other important foreign trade partners, whereas imports will rise primarily on account of higher imports of equipment. Imports will be under the impact of the continuation of the investment cycle and will be led by the imports of equipment and intermediate products for industry purposes. The imports of consumer goods will also rise to a slight extent owing to the recovery of consumption. When it comes to risks to the projection of economic activity, we also believe that they're symmetric and they relate primarily to the pace of recovery of the euro area and our other important foreign trade partners, movements in the international financial markets, movements in the commodity market as well, primarily oil. And we are a net importer of oil, as well as the prices of base metals and cereals, which we export in net terms. And this also relates to a lesser extent to the new agricultural season and the speed of recovery in the energy sector. I would now like to give a brief overview of the text boxes presented in the current inflation report. One of them relates to movements in economic activity. And we expect that it explains the reasons why we expect GDP growth acceleration this year. This is the explanation of the so-called carryover effect. What we wish to emphasize here is the meaning of the concept itself, namely, if we assume that gross GDP will stay at the level achieved in the final quarter of the previous year, that is, if growth rates of GDP observed by quarters would equal 0 this year, only on these grounds, this year, we could expect a rise in GDP of 1.1%. And owing to the fact that during the fourth quarter of last year, we saw significant recovery of economic activity with the gradual waning of the effects of supply-side shocks. And given that GDP growth at year-on-year was 2% on account of the recovery of construction and service sectors, so namely this year, this will be positive contributors to the achieved growth rate of 3.5%. And finally, I would like to end my presentation with the text box where we followed the indicators of import prices. It combines the effect of global oil prices, food, services, and other products. This is an indicator that monitors these 4 components given the structure of imports. And if you are able to see on the right chart in the slide, import prices in the period before 2012 recorded relatively high growth. Since 2013, this indicator has been declining on account of falling prices of primary commodities, primarily oil and primary agricultural commodities, whereas during 2017 we saw their rise led by the recovery of global oil prices. However, what we wish to highlight is that the impact of import prices on inflation depends also on the exchange rate, and this effect is not negligible, which you can see on the left side chart. In the period until 2012, the impact of import prices on domestic inflation was additionally reinforced by the depreciation of the dinar. And we also had relative stability of the exchange rate in the period that followed, and this contributed to the reduced volatility of imported inflation. And as a result, we had the reduced effect on domestic inflation and on inflation expectations, which remained anchored within the target tolerance band. When we talk about the impact on inflation expectations, we bear in mind the fact that import prices have a direct impact on domestic inflation through prices of final goods imported, and indirectly through production costs, whereas there is also a second round effect, that is the impact on other prices through the impact on inflation expectations. And let me reiterate, the achieved relative stability of the dinar exchange rate was an important factor contributing to price stability in this period as well.
Shall we proceed with questions? Colleague journalists, we are open for all your questions. Sanja Ljubisavljević, RTS. What's the position of the National Bank of Serbia regarding the famous bank charges for loan processing? Bearing in mind the decision of the Appellative Court and the position of the Serbian Banking Association, are the banks eligible to charge these costs or not, to incalculate these costs into interest rate? What's the position of the National Bank of Serbia? The position of the National Bank of Serbia is generally known. We repeated it several times so far, and also we presented our view in the press releases so far. This has not changed since in the period while I have worked in the National Bank of Serbia. We are working in a market-based economy, which means that we bear in mind the protection of consumers, and the way we protect consumers is by acquainting them with all the elements of the contract, with all the risks that they may face in entering into a contract with a bank. That's where the National Bank of Serbia starts its work, and we finish our role in overseeing the application of the law of protection of consumers. Whether the consumers were really acquainted with all the costs that banks were eligible to charge to them. At the moment when the dispute starts between two willing contractual parties, the only thing that the National Bank of Serbia could say or do would go outside our competencies, our jurisdiction, and would not be in line with the market behavior and market economy, where all market participants should bear responsibility for their decisions. What is interesting for all of us, and what is also the subject of the dispute in court, is what is considered a cost, the real cost, whether it is incalculated into the interest, what is the nominal interest rate, what is effective interest rate, and you can easily find a link with the law on obligations, where the interest is defined as a cost in lending, but it does not define nominal or effective interest rate. Whether the effective interest rate assumes real costs of the loan, whether they're well calibrated to the service. That's where we have tried for years to introduce uniformity in bank practices from the moment of advertising their services to the moment of concluding a contract with citizens, which means that this service of approving a loan, of keeping the account, and all other accompanying costs to the loan should be, how should I say, should correspond to the efforts invested in approving a loan. So we are trying to introduce a competition between banks and to restore reputation to competition, where the citizen should have a clear view of what is offered and at what prices, which means that banks have the right to charge the fee, but they are also obligated to present such fee in a very clear manner to citizens in order to avoid any justification on consumer side to say that they were presented with some deficient product or that they were not well acquainted. So I will not go into further detail or comment court decisions, and I would also not interfere in the job of the Serbian Banking Association.
Bojan Anđelić, Insider. When analyzing bank in its bank supervision, why the NBS ascertained that the NBS ascertained irregularities in each loan approved. Your claim is not true. We had an insight into this document. Your claim is not true because I have insight into supervision procedures from the moment of making the supervision plan, regular, extraordinary, announced, not announced, and so on. And to tell you the truth, I'm surprised by the level of the lack of information of the overall public about who determines the risk methodology when approving loans. The National Bank of Serbia lets other banks, lets banks to assess on their own who to give a loan and under what conditions, meaning that the risk methodology for loan approval is assessed by each individual bank, but once the methodology is prescribed, the bank must comply with it. Or if you say that some clients are risky clients and that you should not invest in them, then you should comply with this as well. Interpretations that the National Bank of Serbia forbids the financing of some clients in any area or activity. So this is not true, simply put. And those who give you to read such findings should also submit to you complete documentation in terms of own methodology, risk assessment, and everything that is held by the Bank Supervision Department of our central bank. The National Bank of Serbia will not change its practice for the sake of anyone, and it will remain committed to preserving financial stability by not commenting on any individual bank in supervision procedures for any reasons or no matter from what side these questions arise. So these irregularities concern the fact that they did not approve a loan in line with their rules. Yes, we can say so. The bank itself assesses whether to give a loan and who to give the loan to. And once it prescribes these rules, they must abide by them. And this is why you ascertained that this is an irregularity, because they did not comply with these documents. Yes, there are such circumstances when banks do not comply with the methodologies that they defined. And the basis of such methodology is prescribed by the law on banks as well. I really wonder, believe me, I believe you will be surprised as well. We received questions from some individuals who said, how is it possible, how does the National Bank of Serbia determine the right of somebody to acquire companies abroad? How is it possible that the National Bank of Serbia assesses whether somebody he opens their own methodology. When a hairdresser wishes to open his own beauty parlor, of course there is an inspection that comes and assesses the rules applied and so on. And of course there is the law on banks which regulates the operation of banks. And for the sake of illustration, you have a highway and it gives you many benefits. You can drive speedily and so on, but to enter a highway you need to have the driving license and you need to comply with the rules on the highway, meaning that banks are not second-rate village route or something similar where you can drive a tractor without a driving license. When you're on the highway, you need to comply with the rules because cars drive very fast, go very fast. And in the banking system, the mistake of one participant produces serious consequences for the overall system because of interlinkages and because of the basis thing, because of the trust on which the banking system rests. The National Bank of Serbia will support any bank and any participant in the financial system, an insurance company, a leasing company, payment institution, who base their development on sustainable and stable grounds. And this is why we have the law on banks. This is why we have the regulator, that is the supervisor, this being the National Bank of Serbia in our case. We monitor and supervise their activities, and we will continue to behave in such a way in future as well. And let me repeat for who knows what time, how many times I have repeated this. We do not look at the owner, the country of origin, or anything similar when it comes to the banking sector and insurance companies and all other participants in the system. How many times has it happened in practice that you gave your consent for acquisition and then you revoked this consent? So I will give you a few pieces of information when it comes to AIK Bank. When it comes to the acquisition of a company in Slovenia, you have to know that this was the first case when a domestic bank appeared with the request to acquire ownership abroad. So this consent, assessing all the conditions transparently prescribed by the National Bank of Serbia, was issued in July 2016. So you get a statement once, and you never prove it later on. If you have the statement that you were born on a particular date, you don't have to prove it once again. Other things are always verified again. We have to see whether there are conditions enabling you to assume risk in terms of the acquisition of a company. Whenever you require a document, you always need to have a fresh certificate, so to say. And the National Bank of Serbia conducted regular supervision exercises, and we determined that the conditions valid in June last year, based on which, I apologize, it was 2016. So the conditions under which AIK Bank gained ownership in the amount of 20.99% in Gorenjska Banka in Slovenia, we concluded that the consent had to be revoked for proper reasons, and there are orders and measures that the bank should fulfill. And this is not only the case with AIK Bank, there are other supervision procedures as well. We also issued several interesting measures in the insurance sector to international companies as well. And the media were not really interested in this. I can make a link, but I wouldn't go into the details when it comes to the reasons. They're aware of their mistakes, they're correcting these mistakes, and they're continuing to cooperate with us. The industry speaks favorably about this because keeping the order and introducing the order means that you constantly supervise all the entities that you are responsible for. In 2012, 13, 14, in 2014 we had the delicensing issue, and I said that I will never delicense another bank again, meaning that this would imply that we were not conducting our supervisory function in the proper way. We support growth and development of all participants in the system. Do you have any more questions?
I would like to ask, according to our information, you were present and you presided the meeting of the Serbian National Party in 2018 in January. Yes, it was confirmed from several sources. It's a very interesting question. I have no comment to this question. So you weren't present at the meeting? No. Thank you. Savic from agency Bloomberg. The key policy rate is on hold for 3 months already, bearing in mind the favorable environment, both domestic and foreign environment. What's the moment to change the key policy rate, and is it more probable that it will go up or down? This time we decided at the rate-setting meeting of our executive board that there are conditions, given the inflation movements, to consider the lowering of the key policy rate. However, this was an expectation. We expect that in March, Fed will make a decision to raise its Fed fund rate. However, there is still volatility, which are indicated also by the European central banks. So in the light of this, we decided that March is coming soon, and that at our next rate-setting meeting, we will take all this into consideration, which could prompt us to maybe lower the key policy rate further. When I'm saying volatility, I'm openly saying to the public that inflation is our legal mandate, but you should never forget was the Passover effect. This was also covered by Mira in her text box. This was the Passover effect to inflation, and also an exceptional interest of foreign investors for a 10-year benchmark dinar bond, where, as I said, the demand outstripped the supply by 5.5 times. And yes, the 53 million dinars was demand, and 26 was sold. So all this shows the interest of foreign investors to enter our long-term dinar securities. And previously, they also supplied themselves with dinars in order to buy these securities. We would like, in expecting the forthcoming auctions, we would not like to see this pressure passing over to depreciation pressures in the foreign exchange market, in order to avoid adverse effects on inflation, which is our key primary objective. In talking about the key policy rate, we are not the people who are only considering and analyzing inflation as one target and to miss all other targets aside from that. So one of our objectives is also stability as a precondition for sustainable growth. Stability is very important, both political, economic, financial, low and stable inflation and relatively stable exchange rate. And the reason why we have not made the decision to lower the key policy rate yet is in order to contribute to this overall stability. And if you allow me, in answering to your question, I would also like to say that we have some interesting questions on why we intervened in January with 180 million euros in order to maintain the relative stability of the exchange rate. Like we intervened too much this January, but let me acquaint you that this year we also announced the seasonal pressures related to energy purchases, repayment of obligations by residents, and that's why we had higher demand for foreign currencies. So the demand outstripped supply by 230 million euros. The NBS met this demand in one part, and the other part was met by business banks themselves. But these 180 million euros of interventions are not any kind of record, because in January 2017 we intervened by selling euros in the foreign exchange market. We sold 225 million euros. In January 2016 we sold 290 million. In January 2015 we sold only 90, but those depreciation pressures happened in December, and it amounted to 375 million euro. I would like to illustrate our consistency in making monetary policy decisions, where in order to maintain inflation within the target tolerance band, we are not observing only the key policy rate. This is not our only tool, but only interventions in the foreign exchange market. And you must admit that you read the statement by Mr. Mario Draghi last week, when he said they are closely monitor the volatility of the euro, which also affects the inflation, which is their target as well. I would not like to say who is copying whom, but this is just evident facts that volatility in foreign exchange market is something that should be considered as well and should be kept within some control with all tools in order to have all these effects that we are presenting into something, to spill them over into something that's called better picture of Serbia, higher GDP or better living standards. Why I'm saying this? 10.4% of reduction in public debt has a composition. There are many people who are attributing this to external factor, saying these are intercurrency changes. The share of intercurrency relations in this reduction is only 2.9. This is strengthening of euro against the dollar, and 2.1, almost 2.2, is strengthening of the dinar relative to euro. The remaining part is lower borrowing of the government, 2.4%, lower cost of borrowing, and also growth of GDP, which contributed with 3% to this overall amount of 10.4% of reduction in public debt, which was reduced by to almost 60%. So these precise factors, intercurrency changes of weakening of the dollar against the euro, are only 2.9%. Everything, all other parts are fiscal policy, monetary policy, the government and the National Bank of Serbia, and their coordinated activity in all areas of making and conducting economic policy. This is this wider picture that we are talking about. Volatility in the primary commodity markets, in the oil market. This is something that shall be taken into account when making a decision on whether to make this, how should I say, scholarly response of reducing the key policy rate. But I would like to say that this key policy rate is something, it's an anchor for foreign investors coming here as well. So we have to stay, we still have a deficit. Yes, we have lower needs to borrow. Yes, the government brought a responsible decision. And I will directly say this decision to not to borrow in order because we have to repay $750 million that was of dinar securities that were issued in 2012 is to a large part the decision and efforts of one man who was very persistent, Aleksandar Vučić, our Prime Minister. He was very persistent in his decision to avoid new borrowing and to repay this without new borrowing. What does this mean? To repay your debt, at the same time lower the cost of borrowing over the government. We did reduce this cost, but It's impossible to fully eliminate the inherited debt within 5 years of a government which has a current deficit. So one part of this has to be financed from portfolio investment. In order to stay in the radar of foreign investments, we have to be attractive. Also by our interest rate. I said this is 5.35 for a 10-year security in dinars. But what's good news for everybody in dinars is that before this February, the concentration of dinar long-term securities in one foreign investors who did not mind much the long-term nature of its investment, but it exited our papers whenever our securities, wherever he had some more favorable destinations. So this investor exited Serbian securities. Instead of this investor, we got several long-term oriented investors who have a buy and hold policy and who are not chasing only high returns, but are gladly staying within countries which are attractive investment destinations, even at times when they are not so attractive in terms of returns. Now we can boast with such investors, and probably we'll have to intervene in the foreign exchange market today as well, but this time on the buying side in order to prevent excessive strengthening of the dinar, because we are seeing interest of foreign investors for the following auction that's scheduled for this month. Maybe this was a bit an extensive answer, but I tried to present numerous reasons that we're taking into account when making a decision on lowering the key policy rate.
Daniela Ilić, Krasić, Večernje novosti. Did the NBS recently dismiss a member of a governing board of an insurance company? And is that true? And have the first steps been taken in terms of the privatization of Komercijalna bank? The National Bank of Serbia deals very seriously with the activities in the insurance market of Serbia. This will be our focus this year. Yes, we dismissed one member, and we impose all those measures and fines prescribed by the law, bearing in mind that quality participants those ready to correct their mistakes have the conditions to continue to operate, and we do not take into account the country of origin of such an insurance company or any other financial institution. And what I'm especially pleased with is the request of such insurance company is that after the imposed measures, actually they come to talk to us about their further operations, because I'm not ready to hide behind legal regulations or to pretend that I do not understand what some phenomena lead to. So if you have the transaction cost, so you change two members of the executive board, you pay one fine and so on. If, for example, it happens that not complying with the law financially pays off to such a person, this should not be tolerated. Also, sometimes some things are done in an illegal way and they're not being fined, and then they become acceptable behavior. We do not want such practice to exist or to be sustained, if it existed at all, because now I may risk being a bit poetical. Please do not take it amiss. I need to quote Kafka, who says that when tigers enter a temple, a sacrificial temple, and when they break the jaws presented there, and when they use all the liquid presented there, then this becomes usual practice. So this should be prevented. This should not become a ritual, an entrenched ritual, because any official, any state servant should protect the interests of all, because any damage in an insurance company, for instance, when you have irregularities in the sale of life insurance. This is not only damage in ultimate terms when this spills over to the budget, as in case of banks, and the cost of the deposit insurance agency. Namely, when it comes to insurance companies, such behavior compromises the very service of insurance and the service that you sell as the service of life insurance if you do not sell it in a legal way. And those who have to charge such a penalty do not have the trust when buying the service, when they need to get the damages. Of course, there are measurable damages and those that are not measurable, and we have to take into account this to an extent. The National Bank of Serbia can do this on its own, whereas on the other hand, other institutions must also do that. They have to make sure that operations are legal. When it comes to Komercijalna Bank, at the time when we had the supervision in AIK Bank, in Poštanska štedionica, we also had supervision exercises in Komercijalna Bank. We supervised their corporate governance. We imposed some measures against them, and we believe that the privatization of Komercijalna Bank should not be delayed in any way. We have excellent cooperation with the Prime Minister, Ms. Brnabić, and we expect that Komercijalna Bank will be prepared for the privatization in the way planned, but I also have to express an impression. No guarantee of good operation is the surname or financial institution or a natural person in any financial institution. Meaning, what I want to say is that the quality of governance and the quality of work depends on complying with the procedures. Procedures are adopted and complied with by people. It is very important that every institution that has a shareholder stake in a bank, such as Komercijalna, should not allow that its reputation be jeopardized by having its representatives not complying with general operating rules. So we have to be unbiased, as we have been so far when it comes to all participants in the system.
Radmilo Marković from Vreme, Istinomer. I'm interested in investment. You said that this will be one of the drivers of growth. What were the private domestic investment in 2017, and what's the estimate of the National Bank of Serbia in 2018 for private domestic investment? I will say what's in gross terms, foreign direct investment is 2.55 billion and net 2.4 billion. You can see that we have investment from Serbia to abroad, and without speaking about Serbia to Serbia, Branko will say what's the amount of these investments. They are measurable and they are very important. What's the essence is that the key contribution to growth in the last few years were investment. Not only contribution in terms of the dynamic of growth, but only in terms of sustainability of growth. They were the key drivers of the exports in the last 2 years, and in the core of these are private investment. What I would like to emphasize is that a significant part of this investment comes from the profit realized in domestic companies, while one part comes from a relatively high foreign direct investment coming from abroad. You heard from the presentation of Madam Governor that foreign direct investment in the last year amounted to 2.4 billion euros net. This is around 6.6% of GDP. And this was a key driver of stability, which we have in terms of balance of payments of our country, which means that our current account deficit is more than fully covered by this investment. What's also important, and Milan will go into detailed figures related to direct investment of private sector, is that the largest part of this investment goes into export projects, into tradable goods, and gives a key contribution to sustainability of growth and contributes to the stability of the financial market, also presents the basis, that is the fundamentals on which we build relative stability of our exchange rate. My colleague Milan Trajković will present specific figures. Speaking about the numbers related to private investment, according to our estimate in 2017, they grew by around 9%. Our estimate is 8.8%. Speaking about this and the next year, we were a bit conservative in our estimates. In our projection, we embedded the rate of between 3 to 4% growth of private investment. Why we were conservative? At this moment, all factors, or to say almost all factors, speak in favor of this. Primarily, what we will see in the next period is the preservation of full macroeconomic and financial stability. What we also certainly do have is improvement in the overall business ambience. We are seeing also the decline in the risk premium, the upgrade in credit rating, and all the information we have speak in favor of this, that in the coming period we will see continuation of high FDI inflow. We also see the effects of the monetary policy easing so far. Lending is on the rise. We are also seeing the faster implementation of capital projects, and we are also seeing the growth in the euro area, eurozone, which is our main foreign trade partner, and we also depend on them speaking about private investment. Was there effect in GDP? Total investment last year, speaking about the real GDP, they amounted to around 20%, and private investment are around 70%, speaking about real GDP, depending on whether you're looking at a real or nominal GDP. So you're saying that private are 17%. Yes. Maybe even a bit more than that. Government investment were around 3% of GDP. Private were over 17% of GDP. I asked you about domestic private. You do not have such division. You have total fixed investment, and the only way on how you can arrive at private investment is to reduce the total government investment. Another question. You said in the last year, 3 out of 4 quarters net exports drove GDP down. We had 20% growth in foreign trade deficit. We had strengthening of dinar exchange rate from 124 to 118.5, and we are seeing also the increase in wages and pensions, which will also increase consumption, which will also influence on increase in imports. So based on which you think that net exports will be positive in terms of GDP. You said that in 3 out of 4 quarters we had the decline in net exports, and you're right. And you are right in saying that exports went up at the rate of 10%. The services were grew even faster at 14%. Imports was faster, but our estimate is that is not attributable to the exchange rate. When you're looking at our commodity imports, where the imports rose the most is intermediate goods for industry needs. So we're talking about raw materials. And what's also important is that you had high imports of equipment, which was amounted to 230 million euros, and according to official data, the total imports of equipment was around 2.3 billion euros, with a certain non-classified part. After reclassification, it will amount probably to 2.6 billion euros. So these are two key reasons of the growth in imports last year. But the smaller reason was consumer goods. Our estimate is that in the last year, it amounted to around 120 million euros or 130 million euros. So the imports did not increase due to consumer goods. We also had these imports of energy in the first quarter of the last year, but these are the two smaller items. So the biggest part are raw materials for industry and equipments for industry. So this is consistent with the growth of investment, which we saw, and we are seeing this in the coming period as well. You said the contribution of net exports, yes, but for this year we are projecting only a mild contribution of net exports, 0.1, which is practically neutral.
Thank you for your questions, which are really excellent. I would just like to add something concerning private investment. A 9% rise was the highest in the last 5 years, and the governor and me have commented on this right now. And perhaps we can also add to what the governor and Mira said, and this concerns rising external demand. Projections have risen when it comes to euro area growth. This pushes up our exports and manufacturing 13.6% last year, and this is what we expect to continue. Mira mentioned a decline in agriculture in 2017, the expected rise this year, and in the structure you also have the share of agriculture. We expect this effect not to be so pronounced this year. When it comes to agricultural, this is what we included in our projections. On this occasion, we would like to point out the following as well. You have the similar situation in all other countries. You have a rise in imports based primarily on rising imports of equipment and intermediate goods, which is in line with investment cycle and developments, the inflow of FDIs in export-oriented sectors. So this is something that we observed in Serbia and all other countries. When it comes to rising imports, we have solid imports rising, and we also expect a rise in exports. This gives us, overall, this gives us what we have presented to you in our projections. If the governor could repeat, in short, when it comes to the decline in public debt of 2.4%, what is the structure? So 2.4% goes to government debt repayment. 3% goes to GDP growth, 3 percentage points. This is the contribution. 3 percentage points of GDP is the contribution to 10.4%. Intercurrency relations 2.9. The strengthening of the euro against the dollar. This is the only external reason, and 2.2% is the strengthening of the dinar against the euro, meaning that of 10.4% we have 2.9%. Being the only external factor. The rest is the contribution of GDP, the strengthening of the domestic currency, and debt repayment by the government. This morning I read in newspapers that FX reserves were the highest in 2012, and now they have been reduced because of interventions. This is not true, because you can also have insight into the information about FX reserves when you reduce from 10 billion at the time when you deduct 1.4 billion euros from this amount. You will get, that is accounted for by the IMF, you will get a lower amount of FX reserves, but net FX reserves minus what is held by banks, and this is only a temporary thing, so this amount is higher. Then it was 6.6%, and now it is 7.9 billion euros, let alone the structure. Now we have 19.1 tons of gold, and we manage FX reserves in a very responsible way, contributing to overall stability. When you have such dilemmas, just contact the National Bank of Serbia, and the National Bank of Serbia is open to give all details, all precise pieces of information when it comes to penalties, fines, interest rates, and so on. So we are here to help Serbia go forward. If you don't have any more questions, I would like to thank you all, and we will see each other within 3 times, perhaps even before, if we lower the key policy rate.